So what are the main options when it comes to generating passive wealth through real estate? There's really two big buckets or two big umbrellas that these things go into: debt and equity. So what a debt investment means is it's much more similar to that of the bank or a loan. You give somebody money and then they pay you a monthly interest rate, and then when the deal closes out, you end up getting all your money back. When it comes to equity investment, it's tied to the overall profitability of what the real estate and how it performs. Okay, so in the case of a house flipper, if you were to, or an apartment complex, if you were to put your money into a real estate fund and they fixed up the property and then sold it and they broke even, well, at that point, all the investors end up just getting all their money back because the investment broke even. If you were operating on the debt side of things, it didn't matter that they broke even on this deal. Well, you would get your return on what you were promised on those monthly interest payments. Okay, so there's pros and cons to both. You may have heard me in some other videos. If this is your first one, if this is your first episode, the Passive Wealth Show, what we're all about is helping you learn how to transition from being a high income earner into going out and having your money work for you so that ultimately one day you don't have to. So on other videos, I've mentioned this before, one of our companies over the last 15 years has taken $250 million and it's delivered on the promised return 100% of the time, okay? So this is a debt structure, and how we have it set up is that the individual would give us money, and then we would turn around and we'd either use it for our own company if we were the investor doing a flip, or we would lend the money to another investor who was doing that opportunity. And regardless of how the deal did, if it made us $100,000 or if we broke even on it, our investors made what they were promised on the return. So what's nice about debt, and one of the biggest advantages, is it's a fixed return. There's not as much volatility in it, and you have a lot of certainty around what the deal is going to do, or around what the investment's going to bring you. Especially if you have a borrower with a track record like ours. Okay, so on the equity side of things, what's nice about it is that if you do have that home run, you have a lot of upside on returns if everything goes right and everything hits. Okay, then there's also other benefits to real estate ownership, like like depreciation on your taxes. You can take depreciation on the properties and get some tax benefits there as well. So when it comes to this, one of the disadvantages within private equities is they're not as liquid as what debt normally is. You can do a lot of structures where it's like a 6-month note or or a year note, and then call that money, get it back within 30 days. So there's a lot more fluidity typically. And when I talk about these terms, a lot of it I'm talking about is just things that we've done over the last 15 years and the 3,000 plus deals that we've done. There's all sorts of different structures. I'm really just referencing how my experience with what we have done as well. So there's really a time and a place for both of these strategies in someone's net worth. We have right now in our structure, the debt is not set up in a fund structure. It's one investor that gives us $100,000 and then we put it on a property. And then we do have an equity opportunity as well, but that's really reserved to people that we know and we're in a relationship with and everything like that. So these are some of the differences between the debt and the equity. One of the things that not a lot of people know about is you can take retirement account money, and if you have a self-directed IRA, or you can open up a self-directed IRA, and you can put your retirement account money into that self-directed IRA, and then you can invest it into real estate. And when you make that investment, it's really as simple and as passive as taking that money and buying a stock on the stock market. The team and the people you're investing with end up, the way these structures work is they do all the work for you, and you can earn and build passive income and passive wealth. So I sit down with people every week to kind of discuss some of these strategies in person and do a customized one-on-one with people. If you have any questions, if you want any insights on like what you have going on, I'd be happy to connect with you. The best thing would be to just connect with me on LinkedIn and shoot me over a message. I do look at those, and if I can help you in any way and help you think through some of this and what's best for you, I'd love to provide you value that way. So just let me know. Love to connect.